Ever wondered how the biggest investors make their decisions? Welcome, dear listeners, to the intriguing world of value investing, a strategy that has proven to be the secret sauce for many of the world's most successful investors. Let's start by introducing a few of the heavyweights of investing who have championed this approach. We have the Oracle of Omaha himself, Warren Buffett, his right-hand man, Charlie Munger, and the magic formula wizard, Joel Greenblatt. These titans of investing have made fortunes by practicing and perfecting the art of value investing. But what exactly is value investing, you may wonder? Well, imagine you're a chef, and you're shopping for the ingredients to make your signature dish. You know the quality you're looking for, and you know what price you're willing to pay. You're not going to overpay for a tomato no matter how juicy it looks, right? That's value investing in a nutshell. It's about finding quality stocks at a price that makes sense, based on their intrinsic value. Value investors are like detectives, poring over annual reports, deciphering financial statements, and scrutinizing fundamental data to uncover the true worth of a company. They don't just follow the market trends or listen to the latest buzz. They dig deep, searching for those golden nuggets information that can reveal a company's real value. And once they've found a company they believe is undervalued, they're willing to wait. They understand that the market can be irrational in the short term, but over the long haul, quality and value tend to rise to the top. So if you've ever been interested in how to invest like the pros, or if you're just curious about this whole value investing thing, you're in the right place. We're about to embark on a journey, exploring the strategies, philosophies, and techniques that have made these investors so successful. Intrigued? Let's dive deeper into the world of value investing. Scene script. Imagine being the Warren Buffett of your neighborhood investment club. Now let's dive into the lives of the pioneers of value investing. These individuals didn't just stumble upon their fortune, they meticulously applied the principles of value investing to amass their wealth. Let's start with Benjamin Graham, often hailed as the father of value investing. Born in the early 20th century, Graham had a knack for numbers and an insatiable appetite for knowledge. He fundamentally believed that every company has an intrinsic value, and if its stock price was lower than this value, it was a golden opportunity to invest. Graham's biggest investment? Geico, an insurance company we're all familiar with today. He saw the value where others didn't and made a fortune. Then we have Warren Buffett, the name synonymous with investing success. Buffett was a student of Graham's principles and added his own flair to it. He believed in investing in companies with a competitive advantage, or as he calls it, a moat. Coca-Cola, with its brand recognition and worldwide presence, was one such company where Buffett saw value. The rest is history. And let's not forget Charlie Munger, Buffett's right-hand man at Berkshire Hathaway. Munger's approach was to buy quality companies at fair prices rather than cheap companies at bargain prices. His biggest investment was in See's Candies, a company whose quality products and strong brand image were its moat. Now here's a fun fact. These investing gurus are not just superstars of the investment world, they're also super savers. Imagine Warren Buffett, a billionaire still living in the same house he bought in the late 1950s. Talk about frugality. The common thread among these pioneers is their unshakable belief in the principles of value investing. They studied companies, analyzed data, and then made informed decisions. So these investment gurus didn't just wake up one day being experts, they learned, studied, and most importantly, they read. Remember, the road to becoming a successful value investor is paved with knowledge, patience, and a dash of frugality. Can books be your ticket to financial freedom? Well, they were for our investment gurus. In the world of value investing, there are a few books that stand out as the gold standard for understanding the principles of this approach. And no, they're not get-rich-quick guides or mystical financial tomes. They're practical, insightful, and dare we say exciting reads that can help you navigate the choppy waters of the stock market. First up is The Intelligent Investor by Benjamin Graham. This isn't just a book, it's an investment Bible. Graham, also known as the father of value investing, lays out the blueprint for sound investment strategies that don't leave you lying awake at night. He teaches you how to analyze a company's fundamentals and make informed decisions about the fair price you're willing to pay for it. You'll learn about the importance of a margin of safety, and here is where we should clarify something. The margin of safety in value investing does not mean that you're looking for a significantly lower price than the estimated intrinsic value. Rather, it's a precautionary measure against human error in the calculation and an extra protection against mispricing by the market. Graham also emphasizes why you should always be a connoisseur of value, not a follower of trends. And the best part is, no Wall Street jargon, just plain, good old English. Next on our reading list is The Little Book That Beats the Market by Joel Greenblatt. This book might be little in size, but it's colossal in insight. Greenblatt, a successful hedge fund manager, simplifies the concept of value investing and gives you a magic formula, not the Harry Potter kind, but close enough. This formula can help you identify good companies at bargain prices. It's like having a sale on Wall Street, and who doesn't love a good sale? Just imagine, these books could be the most valuable investment you ever make, and you don't even have to worry about market fluctuations. Now that's what I call a good deal. But remember, while these books are a great starting point, they're not the be-all and end-all. They're stepping stones on your path to becoming a savvy value investor, a journey that requires patience, discipline, and a healthy now armed with these books. What's the next step to becoming a value investor? Ready to roll up your sleeves and dive into the world of annual reports and fundamental data? Let's imagine you're an investor. You've got your eyes on a particular company. Let's call it Fruitful Tech. Now the first thing you'll do as a value investor is to get your hands on the company's annual reports. You'll pore over these reports like a detective. You'll be looking at the balance sheet, income statement, and cash flow statement. You'll be studying the company's earnings, its debt, its assets, and its liabilities. You'll be scrutinizing the management's efficiency and the company's competitive edge. Now you may be thinking, reading an annual report? That sounds like a cure for insomnia. Well, think of it as the most exciting bedtime story you've ever read. A story where you get to decide the ending. Once you've done your homework, you'll then estimate the company's intrinsic value. This is what you believe the company is truly worth, regardless of its current market price. So, let's say you've crunched the numbers and you've concluded that Fruitful Tech's intrinsic value is $100 per share, but the market price is only $50 per share. Well, congratulations, you've potentially found a bargain. But wait, you're not done yet. As a value investor, you'll want a margin of safety. So, you'll decide on a fair price that you're willing to pay for Fruitful Tech stock. This price should be significantly lower than your estimated intrinsic value. This is the art of value investing. It's not just about buying low and selling high. It's about making informed decisions based on thorough research and careful analysis. It's about patience, discipline, and a keen understanding of business fundamentals. So, with your calculator in one hand and an annual report in the other, you're ready to take on the stock market. Remember, the stock market is not a casino. It's a marketplace where businesses are bought and sold. So, is value investing all about data and numbers? Not quite. Yes, numbers play a crucial role, but value investing is as much about mindset as it is about mathematics. What if I told you that value investing is not just about numbers, but an art form? Yes, you heard it right. Value investing is less about crunching numbers and more about understanding Mr. Market. Mr. Market, a hypothetical investor, is prone to wild mood swings and his perceptions of value are often flawed. The art of value investing lies in identifying when Mr. Market has undervalued a company. Moving on, value investing is an art form of valuing businesses. It's like being an art critic, where amidst a trove of paintings you recognize masterpiece being undervalued. The seller doesn't realize its worth, but you do. So, you buy it, knowing that sooner or later, someone else will appreciate its true value too. Now replace that art gallery with the stock market and the masterpiece with a company's stock. This brings us to the third point. Patience, discipline, and deep analysis are crucial in value investing. Yes, the kind of patience required to watch a flower bloom from a bud. You don't expect the flower to bloom instantly, do you? Just like waiting for the flower to bloom, value investing requires you to wait. It's about allowing your investments to mature over time. But here's the best part. While you're waiting, you're not just twiddling your thumbs, you're studying, analyzing, and evolving as an investor. Value investing encourages you to delve deep into the business's fundamentals and make informed decisions. It's not about following the crowd, it's about charting your own course, equipped with knowledge and insight. In essence, value investing is about more than just earning money. It's about embracing a mindset, patience, discipline, and perpetual learning. It's about recognizing value where others don't and having the gumption to act upon it. So, as we've learned, value investing is not just a method, it's an art form, a philosophy, and for some, a way of life. Don't forget to like and subscribe for more in-depth knowledge on value investing.